So the next topic to discuss is the classification of accounts. So in this we will discuss about the accounts classification, and then we will also discuss about the golden rules of debit and credit. What is the rules we have to apply for debit and credit depending on the account types. So let us first try to learn the types of accounts. So accounts are generally classified into three types of accounts. One is called as the real accounts, the second one is called as the personal accounts, and the third one is called as a nominal account. In short, if I want to explain you, real account is nothing but the accounts related to fixed or current assets. So such as cash, building, plants, machineries, computers, vehicles, all these are called as the real accounts. That is, accounts related to current assets and fixed assets is actually called as the real accounts. Same way personal accounts. So personal accounts is what? So personal accounts is nothing but accounts related to a individual, a person or an organization or a firm is called as a personal account. So example of this is the accounts related to our customers is called as actually a personal account. We can call the accounts of suppliers, owners, lenders, etc. as personal accounts. Individual accounts are called as the personal accounts. The next is the nominal accounts. So what is this nominal accounts? So nominal accounts are nothing but the accounts related to sales, purchases, discounts allowed, discounts received, repairs, salaries, interest received, depreciation, all these together is called as actually called as nominal accounts. Any accounts related to sales or purchases that involves income or loss or profit or gain, that is actually called as nominal accounts. So to understand this, we also have to have the dual aspect of accounts that we have to understand. Whenever a transaction occurs, the transaction actually leads to two concepts, that is the concept of debit and credit. That is where it comes or where it comes from or where it goes to in simple terms. Let us continue. Here you can notice here. So this is a diagrammatic representation of types of accounts. So accounts types are classified into two classifications. One is called as personal accounts, the other one is called as the impersonal accounts. So personal accounts, as we discussed, it is nothing but the accounts related to an individual or a company or an institution. This is actually called as the personal accounts. Under impersonal accounts, we have two other sub classifications. One is called as the real accounts, which I have already discussed, that is accounts related to machinery, cash and building or something which is tangible or intangible is actually called as the real accounts. Similarly, we have nominal accounts, an account which leads directly to or which deals with expenses, losses, incomes, gains, like example rent, interest received, salary, etc. All these are called as the nominal accounts. Let us continue. So detailedly I am trying to explain you what is real accounts in terms of diagrammatic representation. You can see here real accounts. What is real accounts? A real accounts which involves like cash and the furniture. Furniture here is nothing but a fixed asset. So cash is also an asset, current asset. Furniture is actually a fixed asset. Here you can notice one of the example. Here what is happening? Using the cash of the company, furniture for the office is purchased. What is being purchased? For the office purpose, furnitures are purchased. So when you purchase this is actually an accounting which is related to real accounts. That is, we are using here the current asset cash and we are purchasing what? Another, that is nothing but a fixed assets. We are purchasing this. So this is a clear example which is dealing with the real accounts. Let us continue. Personal accounts. What is personal accounts? So as I said you, a personal account is nothing but an accounts related to an individual person or an organization. This is actually called as a personal account. So we can further classify this personal account into natural personal account, artificial personal account and representative personal account. Let us continue. Nominal accounts. So this also I have already discussed. So nominal account is nothing but a general account or general account ledger which leads or which is related to income, expenses, losses and gains. So this is what is a nominal account. So example of nominal account is, suppose we have given somebody a credit from the company side, so he is paying the interest towards it. So the interest whatever we are receiving is an pure example of nominal account. So here you can see nominal account is nothing but which is related to expenses or losses accounts, or accounts related to incomes and gains. This is actually called as nominal account. Now the next important thing is, see, before we start any accounts or start maintaining accounts, one important thing which we have to know is the rules which we have to use in terms of debit and credit of accounts or transactions. So before we start this, let us discuss some important terms. So the first term we are talking is assets. What is assets? Whatever the company is possessing in terms of property, things, goods or money, that is actually called as assets. So here technically speaking, what is accounts? Anything which is which will enable the business or the enterprise to get cash or benefit in future is actually called as assets. So assets, how many types are there? There are 3 types. So these are the 3 types. You can say fixed assets. So an assets which is relatively for a long period, that is here we can say that it is like the money invested in this immediately you cannot use, but in future you can use. For example, land, building, furnitures, plant and machineries, all these are actually the fixed assets of the company. That is the money what you have invested in is there, but you cannot immediately use it. Once it is disposed or sold back, then after once you receive the money you can use it again. So this is the reason why it is actually called as fixed assets. Current assets are nothing but the assets which we can immediately use, or the liquid assets we can say this. Example, cash, inventory, stocks, bills, everything, bills receivable, some person is supposed to give us money. All these are nothing but treated as current assets. Liquid assets. So again, what are these liquid assets? The liquid assets are nothing but the assets which are immediately convertible into cash without any much loss. For example, the security policies or the securities which we have purchased, the marketable securities, stamps, etc. When we give this or when we submit this, we can get the money back without much loss. That is why this is actually called as the liquid assets. Next, this is also a type of assets, that is debtors. So debtors are nothing but the person to whom we or to whom the company sells the goods. They are called as debtors. So they buy goods from us on credit or cash mode. So if they buy the goods from us on credit mode, so they are liable to pay that money. So that's why they are known as debtors. So they are also type of assets only for the company. They are also known as debtors. Then stocks. Stocks are nothing but the goods or the goods which we have purchased and which is not sold and which is remaining in our company. That is actually known as stock, or we also call it as stock in trade, or it is also known as stock in hand. Liabilities. The next term which we are discussing here is liabilities. Liabilities means the things what the company is liable to pay to others, which is the company has to give to others. That is actually called as liabilities. So technically, definition wise, it is the amount which the business owes or has to return to other person or individual or a company. So this is actually called as liability. Example, loan taken from the company, or the goods which we have purchased on credit, we are supposed to pay them back. Those are nothing but liabilities. So here the first type which we are, or account type which we are discussing, is actually called as capital. What is capital? Capital is nothing but the amount which is being invested to start the business. If I want to start a business, without capital I cannot start the business. So some amount has to be invested to start the business, that is actually called as the capital, which is a liability. Then revenue. So revenue is nothing but it is nothing but the income of recurring nature from any source related to the business. Next, expenses. So what is expenses? So whatever expenditure is occurring in the company, we have to purchase lot of things for production of goods, services, we have to pay salary, we have to pay current bill, water bill, whatever the expenditure, that is nothing but expenses. Capital expense means an expenditure which involves in the purchase of fixed assets for the company. They are called as capital expenses. Revenue expenses are nothing but the expenses which are involved in the production of goods and selling of goods so that revenue can be generated. That is actually called as the revenue expense. Then we talk about an important term, goods. What is goods? Goods means nothing but it indicates the products which we are trading or selling, which is in our company for selling purpose and not for the consumption purpose. That is not for our own use but for selling. They are treated as goods. And same way whatever we are buying from others for selling purpose, that is also treated as goods. Example, you can notice here an example. A computer purchased for an office is nothing but an asset. That is, if I buy a computer for my office purpose, for my business purpose, for own use, then that is actually called as a purchase of assets, or it is a purchase of fixed asset. But the same way, if I buy that computer so that next I will make some changes and sell it to others, then that is actually called as goods, which is involving in purchase and sales. Next, creditors. Creditors is nothing but accounts of an individual person or firm, so from whom we purchase, from which source we buy goods, that is actually called as creditors. So they give the goods for us on credit, later we have to pay within the stipulated time period. That is actually called as creditors. Next term is bad debt. Bad debt is nothing but, say, when a debtor, when we sell goods to a debtor, and if that particular debtor or that particular source to whom we have sold the goods is now more reliable, that is we lose the hope of receiving or recovering the money from that particular account, then that is actually called as bad debt. Example, you can see here, 5,000 rupees is receivable from an individual called or a company called as Mr. Gore, but he is in a state that is not able to pay back at all. Then that particular loss which has occurred, or the financial loss which has occurred, that is actually called as the bad debt. So next is drawings. So this terms is drawing is nothing but money or goods which we withdraw from the business for our own personal purpose or household purpose is actually called as drawings.